Good morning, David Coombe here with the Week Ahead report. I'm filling in for Jonathan, who's down in the snowy mountains there, hopefully enjoying some of that good white stuff. So, interesting weekend, or interesting Friday night, really, with the non-farms payrolls numbers out of the States, really printing a pretty shocking figure there, showing just how intractable this jobs growth situation seems to be there. At the moment. In fact, we'll go and have a look here at Friday night. The expectation was for 105,000 jobs. The number came through at only 18,000, so not very impressive there. The unemployment rate also crept up 0.1% to 9.2 from 9.1. That's probably the main one to be thinking about there, although there was a print from China that came through with their CPI at 6.4, up 6.2, which again indicates that inflation is becoming a concern as it continues to grind higher, despite the best efforts by the authorities there to pull the reins in on it. Consumer price index for year-on-year number was 7.1 versus 6.9. Previous figure, so interesting there. What surprised me on Friday night was that given that jobs number was as bad as it was, we saw very little reduction in general enthusiasm in the equities market. It struck me, because of course we ended up down 62 points there, or just nearly 0.5%, which really, it wasn't the sort of sell-off that I would have thought would be enough to upset investors' nerves and get them running for the exits. Not to be. So just bringing up this week's chart here, so we can have a look at that. And then perhaps before I do, I'll just have a look at that Dow chart here. We came in on. So that's the 9th there, which was Friday night. We had that opening. We came down not long after open, and then basically just proceeded to grind higher. Now we've got the futures price here that's been trading for the last little while here, and that's actually come off around 60 points. So interesting to see what's going on there. I'll come back to the economic calendar, but first let's just go through the rest of those indice numbers. The S&P 500 down a little bit more, the broader measure down 0.7%, and the Nasdaq 0.45. The rest of the Americas pretty much following suit there, and Europe, whose markets closed prior to, or finishing up prior to the US Open there, pretty negative. I think with the furthest decline of being the Madrid index down 3.47%, so really big move there. FTSE down 1.06, CAC 1.67, and the DAX 0.92. In our region, of course, we had quite a good day on Friday for us, and then Hang Seng 0.87 and the Nikkei 225.66. So that was on the back of that good private job starter out of the States that gave things a push along. Got to be ready to turn 360 in pretty quickly in this business, because we're looking at giving up all those gains again today, because our futures are currently pointing down 40 points, Hang Seng 259 and the Nikkei down 120. Take a look here at the commodities, all green numbers in the energy space. Natural gas just putting on an absolute fraction here at 422. So it looks like we're really having to have a little bit of a nail-biting ride on this particular warrant here that we've issued. We're back down around our entry price, and it doesn't seem to be going anywhere just at the moment. West Texas, up 55 cents to $97.20. Then moving on to the sops, the mixture of was pretty much a mixed bag there. Cocoa down 1.21, it's a bigger move there. Cotton down 1.82, wheat down 1.34, and oats down 1.13 with a big move is to the downside. On the upside we had orange juice up 1.18, rough rice up 1.83, being the principal movers there. Copper at $4.33.35, which was down 0.15. Gold at $15.29. It's only got to put on another $20 or so here, and it'll be retesting the old highs. That was up 10 cents, and then silver at $35.92 is up just 0.4 of a cent. Currencies, we saw the euro buying 1.4319, the pound 1.6003, US dollar 80.94, and the Aussie buying 106.97. The US dollar buying 96.51 CAD and just 0.8394 Swiss francs. Okay, let's have a look at the economic calendar here for the remainder of the week. So we can see that yesterday Chinese trade balance came out with a surplus of 22 billion. We're actually expecting 14 billion, so that's a pretty big widening of those numbers there. And new loans data is out, so that'll be interesting to see if they've managed to slow up that rate of lending there. Moving on, we've got foreign exchange reserves for China print due out sometime today. Then we've got some New Zealand data on retail and card spending. And then Aussie home loans and investment lending. Japan machine tool orders out around 4 o'clock, and housing starts out of Canada later on this evening. Going through to tomorrow, we've got Bank of Rates decision expectations for 0.1%, as it currently is. Then we've got some European or Aussie business confidence, European CPI data out of Germany, and then CPI numbers out of the UK, month on month and year on year. Trade balance out of the US and retail sales out of the UK, finishing up Tuesday, and then going into Wednesday we've got a whole slew of data out of China, GDP numbers, year on year and month on month, retail sales, and then moving through to Japan and the UK with unemployment, currently at 7.7, expected to stay around that. Jobless claims numbers expected to decline slightly, and the claimant count rate at 4.7. Then we go into Thursday. We've got Bernanke giving a semi-annual monetary policy report to the House, and then minutes from the FOMC meeting, and then a budgetary statement. Then we've got some New Zealand GDP numbers out, expecting 0.3, previous was 0.2, that's quarter on quarter, and then year on year 0.5 versus 0.8. Eurozone publishes their monthly report on Thursday evening, and then we've got US retail sales and auto retail sales excluding autos and gas, PPI numbers, consumer price excluding food and energy, then going through the University of Michigan confidence figures, and the Eurozone publishing the July monthly report. So we've got quite a bit of data there to keep an eye on. I think in summary we've got the US earnings season coming up, which is perhaps providing this profit bubble that's keeping things unexpectedly, or I think unrealistically, inflated to the top side, or really bullish, I guess. And think you've got to be a little bit cautious about that as far as looking at the markets like the US in particular. Let's take a look at where our market is. That was the Dow we looked at a minute ago. Let's take a quick look here at the SPY September contract. Okay, so that's Friday's close there. So we continue to maintain the view that the 4,500 level is pretty key. So we're happy to get back down there. Even a little bit of a break below that would probably be okay to be considered to offer an opportunity to jump into the market and go long here. Because our market does feel like it's got some catching up to do. We're being unnecessarily bearish in my eyes, and some of the other equity indexes are exactly the opposite. Anyway, so let's move on and just touch on some of the stocks that I'd like to cover and like to talk about. One that's now back up to my entry level is Medusa. We'll just go to the daily chart. Okay, so last time I entered this, I thought we had a reversal pattern happening here, so I got in just above $7. I was wrong about that and sailed down to nearly $6, but it has now put on quite a good recovery there, so reasonably comfortable that I can hold on to that and hopefully turn a profit out of it someday. Another one I was looking at was Caltex. I think there might have been a little bit of concern exactly with regards to the carbon tax, and price of crude creeping back up is the number one cost input for a refiner. So yeah, I think that saw it coming off here, but it may be holding this level, ready to move on up again. Guess we'll just have to wait and see. St Barbara is another one in the gold space that seems to be putting in a reasonably constructive effort here. It is at the high side of this trading range, low side being around 180. So perhaps you'd look for a break above these levels here before you look to enter that for a break higher. Okay, and then just to finish off, we'll have a look at the US dollar Japanese yen, which we've been talking about for what seems like forever, and I'm sure one day it will do what we expect it will. But yeah, we're pretty comfortable buying it, given that we feel that we know where we're wrong, and I feel it's a pretty low risk trade because it really is well and truly at the bottom of this trading range. So any sort of dips here back towards 80, I'd be happy to buy and go long on that one. Okay, well I've probably gone on enough there, so I'll leave it at that. Have a great week. Play the markets as you see them, I think would be the rule here. And see you again tomorrow. Thanks. Bye bye.